Yeah, okay, mate. So SEA, yeah, you sent this last night, 1 a.m. Yeah, you said the LDO, Lido, yeah. Trade was very nice. Yeah, good. Definitely did have a nice bounce back up, which was nice to see because the drop on it was pretty bad. I still hold spot LDO. Yeah, so interestingly, once coins get to a 10x, I get a little bit weary of them. Now, of course, some coins run way more than that, but I just have seen it in the past that when people, it must be a psychological thing, because when coins go 10x, like if you look at past coins, a lot of coins top out at 10x and get big retraces or whatever. What I will say is if this does drop to below, oh, that's the wrong thing, I don't know what that's there for. If this does drop to below the red 200 moving average, I think it's a fantastic buy point, because I've seen that in the past many times after major top outs, drop to pierce below here, it creates a bit of a pattern like that, and then you get a big move back up to double top or even new highs. So I'm not saying that that's happening yet, but I'm just in a visualization of the chart, I've seen that in the past many times, and if it did drop down there, then I would be a buyer below the red 200. But anyway, let's look at it a little bit more closely now, just to try and figure out what's going on. Now, this video is not sitting right, it's just the date. Yeah, so you can see the yearly, it's got a bit of a wick here already. Is the yearly high in? It's only March, so hopefully not. The 6 month is the same, and the 3 month is very similar. Now, the high is in for the 3 month, so we do know that. Now, what we need to watch is on a new 3 month. I mean, the big question is, are we actually going to retrace? Are we actually going to get a red candle since it's already 10x'd? Are we going to bounce up here to take liquidity into this wick and then flip red again? Well, that is what we need to find out. That's what we need to watch for. There's no question this is a reversal. So if price bounces, I'll go to a 3-day chart here. If price bounces back up into this sort of area, right, first on a new quarter, and starts to reject, well, then we need to be wary and careful. Let's just say we come down and we come up into this level. People will be thinking there's new all-time highs coming, but that is a liquidity grab until proven otherwise. The other thing that I'm not the greatest fan of is this kind of trend line. A bounce up here would kind of cause this neckline. It would kind of cause this to be a left shoulder, this to be a head, and this to be another shoulder in here somewhere, whatever way that happens. And then there would be a potential neckline target, from the breakdown. Oh, didn't mean to draw that. So you just take the breakdown wherever that breaks down or whatever, and it's no coincidence that there's market symmetry, down into this level here, right? So the pattern does line up for a drop back down to the first previous pivot. Now, I do think that this low here is your first major low. In reality, these are all micro lows, and this is a macro low. This is more of a macro low, I would say. So, dips down, you'd want to see this level probably holding in theory, and see if it could move back up. Now, that is the bearish situation, of course. We're unsure yet. It's a bad rejection here, and it might need that dip after, because it did 10x. We have to be real about it and understand that did 10x. Now, the bullish case for this, I would like to see a drop first before the liquidity grab. If this opens up and starts to drop at the start of a new quarter, if the market starts pulling back on a new quarter, well, before liquidity grab, that could be a buying opportunity to then even push even higher again. So if we kind of look down here, into the sort of the body of that. Well, let's have a look at it and see what is it doing. Well, it's filling this wick and it's back into this support level. So that would be the bullish situation, because this is kind of a bit of a bear flag. If you look at it, I know they don't have the bear flags, of course, don't have to always play out or anything, but this is a real rejection. You can see the real rejection on this. It does not have any large volumes or anything yet, so there could be trend continuation. But if you take the market symmetry of the depth of there to the highs, because this pattern's not finished yet, but just say there's another little bounce up here and you take it from the high of that pattern, it takes you down to the bottom of here, right? So filling this wick or down into the bottom of here is definitely worth watching for the bulls. Right now, it's kind of in no man's land. If you actually look at it, it's not an easy place to just buy safely. We are dead center, smack bang center in the middle of the range. The longs were liquidated, the shorts were liquidated, and now we are stuck in the middle of the range. The market loves to be in the center point of the range 70% of the time. So I think it's safest to let the market decide and tell us what to do. Either it's coming down here and then you look for longs, maybe on stop hunts of here or whatever, looking to buy in here. If the market comes up first, well, then you're probably, if we take that high, above there would be a potential short. So that could be a potential short and that could be a potential long. But in here, this is a mess. This is a choppy mess. It's a bit like my drawing right now. It's a bit of a mess. But this, you can just see the action in here. Do you really want to trade that? There's not much edge in the middle of that. The market, it's usually best to let the market tell you what to do instead of you trying to force something out of the market. Now, if we do flip out here to a 2-week chart, there's bearish stop hunts here. That's technically it's a bearish stop hunt. The market is bearish until proven otherwise. So bounces here, you need to be wary of. It is green at the moment. There's a slight bullishness in the near term, but bounces up here, in theory, are taking liquidity up higher. So we've got to watch that and see if it can actually sell off. It is interesting, like the pattern itself. Okay, so the chart on the left is uni. There's a bullish situation right here in the fact that you get these stop hunts, bearish stop hunts. What happens is you actually, let's delete that. So let's delete some of that. So you can see there, basically it's sitting around there, right? Where it's moved up and it's kind of created this bit of a base. See this base here, and we kind of created a similar base. Now on a new 2-week, what does happen is kind of what I was talking about, in the fact that there's a liquidity grab below and it drops down into the bottom of the range before holding and then pushing back up for one more run higher. So that is kind of the bullish case, and you can see then that that pushed higher. Well, it pushed higher here on this chart, so it did manage to come up and break through this stop hunt, right? And it's a very similar chart. I posted about this fractal many times. I posted about it in the OG chat, I think. So that is a scenario I'd be open to, and it's kind of what I was saying. Dips down, the bullish move down. That would be on a new quarter, of course, and that would create the quarterly wick and then bounce back up and go to new highs. So that is like you can see here, down to the low end of the range below the candle, right? That's where it dropped back into here. I suppose we're going to say there. I'm not sure. See, this is a slightly different setup. That's maybe too far down. Maybe we want to go on the top end of there. If we stop on this large red candle, well, that's probably it's safer to draw it up here for the fact that it's more likely to get hit up there. If it draw it too low, it might not come down that far. But I would have preferred, me personally, to fill some of this wick, even though technically it has been a little bit filled. Like if I move this out of the way, see the red candle there? The red candle has filled some of that wick already, so it may not need to be filled now because there's enough of it already filled. This wick here was not filled until later, until it dumped, as you can see down here. So sometimes that can catch off guard. Even here, look at this large wick. You know, it fills it a little bit, but it's only later that it really fills the wick. This one filled straight away, of course. So the fact that this is filled a little bit, it might be already filled enough, and you know, a new 2 week. So what it's saying is basically you need to wait until a new 2 week, and there's no point trying to trade this yet because, as I mentioned earlier, it's still in no man's land. But on a new 2 week, you could focus on it then and see if it can get this bullish bounce back up. But the trend is still up. There's no real indication that there's a top yet. But even uni, there was no volume here. There was no topping volume on uni, except it got this large breakdown, right? Of course. But by then it's too late. There was no indication, except you know, you're getting extended. I mean, you can see there, that's a 15x there. If we were to go at 15x on, if I can just draw that fairly right, if we're going to go a 15x, well, the same, it's saying it's way up there, so it's still a long way away from the same run as uni had, but you know, it doesn't have to do the same thing as uni. Anyway, mate, yeah, sorry for the long video, but hope it helps.